quick conversation with the management of Pakka. They have announced a fundraising exercise with some very interesting names subscribing to the shares and the warrants too. Ved Krishna, Vice Chairman and Group Lead at Pakka Johnson, to just tell us about the fundraise, expansion plans and growth ahead. Ved, good having you. Thanks for joining in. What's the purpose of this fundraise?
Thank you so much for having me. So Pakka is fundamentally rooted in the single idea, how do we leave the planet cleaner? And we do it through two kind of paths. How do we change the food services space? And how do we change the flexible packaging space? And, these are potato chips, chocolates, things like that, things we use every day. How do we make them compostable and recyclable in the paper stream? So these are some of the IPs that we have created in the past few years. And now we are trying to actualize it in the actual commercial space. So the biggest part of the fundraise is to establish like the globe's first compostable flexible packaging facility in our India Ayodhya site. And the second part is to invest further in our R&D. So we have a large R&D outlay in Bangalore. We're trying to further accelerate that so that we can come out with better materials for the future of this planet.
Which is understandable. But so what does this fundraise do in terms of expansion? Are you using it for expansion? What does it take your capacities to? And when do these capacities come on stream?
Absolutely. It is an expansion. Like I said, for flexible packaging, it's an entirely new set of products. The capacities go from the current kind of 45,000 tons a year to about 80,000 tons a year. The plant comes on stream end of 25, early 26. And most of the investment goes into this new flexible packaging products. This is the part of equity that we have created, and of course, the rest comes from debt.
Right. Wait, hi, it's also Samina joining in. So this is interesting. You're working on new IP, new product offering for the market. Help me understand this. Is there already a ready client base that is asking for it? What I want to understand is, from where we stand right now, is it a push product, or was this an ask from your buyers? And hence you're working on it, and hence we already have a visible revenue stream ready to be picked up on?
A bit of both, Samina. Great question. So of course, the global companies that we work with today have got certain roadmaps in place. There's commitments for 2025, 2028, 2030 that have already been brought in place. So what we did was that we commercialized the product last year with a very interesting Indian brand called Brawny Bear. You'd see it in most of these Taj hotels and various supermarkets as well. And now we are working with huge brands to transform their products. So that's the pull part. The push part comes from our own kind of utopian, eclectic kind of spirit that we are working towards a cleaner planet. So we also try and do a lot of push in the sense of that let's create a product that works as well, if not better, than the current petroleum-based substrates, and do not hurt the buyer's pockets in the sense of, can we create a product that is close enough to the current prices and performs as well? So that's the push part. The pull, of course, is there all over the world. The brands are looking for alternates.
Are these high margin businesses that you're venturing into? What are your current margins in the current product offering? And with this new product offering, where do we see margins move to over the next 1 year?
I hope so, because that's definitely the value creation part. So currently, our company has been consistently performing at about 25% EBITDA margins. We are hoping that the new products will inch beyond 30%. That's definitely the direction we want to go, because if you look at a base commodity substrate where we come from, we come from specialized pulp and paper, which we create from sugarcane residue or sugarcane waste. That's what we've been doing. But within that, because we are specialized, we continue to gain about, we continue to work at about 25% EBITDA. As you create more value for the customer, you can inch towards that 30-32%. And that's the hope for the future.
Ved, hi, morning. This is Tamanna here, and very interesting products. One question that comes to mind is the price differential a pain point? One of the big challenges to move to greener options for packaging on a wider scale, not talking about Pakka specifically, is that for companies it just costs more to go green, and then you have to pass it on to your consumers who might not be willing to shell out that price. So just explain to us how you are aiming to close that gap and where that price differential is right now.
Absolutely. Thank you, Tamanna. That's an absolutely right kind of thought that comes from every customer that we talk to. And the general perception we as humankind have, and that includes our own team. And when I talk to our product development team, we kind of start from that standpoint that since it's a sustainable product, it's going to perform poorer and be more costly. And that's a challenge, even for us, because till we don't shift that mindset, we are not going to be able to shift the market. And that's what we are doing as Pakka. We are trying to challenge that because we feel, that even the petroleum-based substrates were created by us humans, and so can other substrates be created. So that's more, again, on the utopian side. On the reality side, it takes time. So we find that the sweet spot for the customer is about 20%. If we are 20% higher, they're going to switch. But we have to perform at the same level, right? Their food cannot get spoiled, because if the food inside the packaging gets spoiled, then you're creating a bigger environmental damage, right? Imagine the whole chain that is be needed to create that food and to be packaged. So the first, our dharma as packaging people is to make sure that the food is kept safe. The second part is the pricing, and pricing is always in comparison. In isolation, it doesn't mean anything. So the comparison is with the current substrates. We find that till it's in the 20 to 25% kind of range, lots of people are ready to shift. Basically, because if you think about it, the packaging part is not more than about 5 to 6% of the total cost. Even if the packaging increases by, say, 20%, you're talking about 1 rupee or something as the max differential. And the brand value the customer creates by way of going to their consumers and saying, look, we've created a sustainable substrate that if you throw is not going to harm marine life, it's not going to harm terrestrial life, it's going to compost, it's going to recycle in the paper stream. That's a huge brand proposition. And people are seeing that. We're talking to big brands every day and they see that. So the sweet spot is 20 to 25%. Can we hit that is the big question. We feel we can.
Okay. Ved, we'll leave it at that. Thanks so much for taking the time out, and all the best with the plans ahead. That's Pakka, SBI Mutual Fund and Carnelian Capital amongst investors in their equity issue and warrant issue. The stock was up 10% yesterday, up another 2.5% today. Has got decent gains behind it. Let's see if the numbers shape up. The management has said that the capacities go up from 45,000 tons to 80,000. So that's nearly doubling of the capacity. The markets in reasonable fettle, holding out, if you will, not quite buckling under pressure. Let's see if today's a repeat of tomorrow, or do we indeed hold out?